Hello and welcome to this lesson. So in this lesson, we are looking at another example using this scalping strategy. So basically, in this example, I'm going to outline how you can formulate this setup and how you'll have executed. We're going to use the 5 minutes chart for execution, but I'm going to break down the setup idea right from the 4-hour chart down to the 5 minutes chart, and we're going to look at that example in more detail when we get to the 5 minutes chart. So from this, this is the Euro USD 15 minutes chart. Let's go to the 4-hour chart first, so that we can get those higher time frame key level that were used actually in this setup example. So let's so this is the setup example right here. So when you go to the 4-hour chart, so this is our 4-hour chart. You can see the 4-hour chart actually has been bearish. So you can see the market has been very bearish actually for a couple of weeks now. So our setup example comes in when the market now comes to retest 4-hour fair value gap. So you can see this our setup. This way our setup forms. So the 4-hour fair value gap I'm referring to is right here. So this is our 4-hour fair value gap, and we're going to look at this example, how the market actually came into this 4-hour fair value gap and created a setup actually using this strategy. So this is our 4-hour fair value gap. So you can see that the market came back to hit that higher time frame key level. So we have that higher time frame key level being hit. Then when you drop now to the 15 minutes chart, we can start looking at those liquidities that were taken out. So basically, you want to see the liquidity taken out either during Asian, London session, or New York session. In this example, the liquidity was taken out during New York session. So let's turn on the sessions. So basically what I wanted to show you is that if you look at this high right here, this is on Tuesday. So this is Tuesday's high that was actually taken out on Wednesday during our setup example. So this I'll call it this actually, this is Tuesday's high. This is the liquidity that was taken out actually during this setup example. So we took out that liquidity at this at 8:30 a.m. This is during New York session. So remember, you want to see the higher time frame key level hit. We have seen that 4-hour fair value gap was hit. Then you want to see some form of liquidity being taken out. We have seen Tuesday's high, which is this high right here, from Tuesday's trading being taken out right here. Then you want to see also that either the London or New York session creating the high of the day. So in this example, we can see there was a break in structure after that liquidity was taken out. So after this break in structure, this confirms the potential high of the day at 8:30 a.m. So that high or low of the day coming in during either London or New York session has a potential of being the high of the day, because we have already said that the London session and the New York session typically will create majority of the time the high or low of the day. So there's always a likelihood or a potential when that high is being created during those two sessions that it might end up being the high of the day or the low of the day. So in this instance, this high at 8:30 becomes the high of the day in our example. And for us now to capitalize on this movement, after that high is created, then we need to drop to the 5 minutes chart so that we can break down that setup example and see how we could have taken advantage. So basically, once we saw that break in market structure, you can either see this break in market structure in the 15 minutes chart or the 5 minutes chart for you to, after that liquidity is cleared out, for you to determine if you have a potential setup. Then you're going to watch now for a breaker or a fair value gap that is left after that break in market structure occurs. So let's drop to the 5 minutes chart and break this setup example even in more detail. So this is our setup example. You can see actually this range, this entire range was created during New York session. That's why I was saying these sessions have a very high probability of creating the bulk of the volume within a trading day. So once we got that break in market structure in the 15 minutes chart and then the 5 minutes, so I'll say that this candle at 9:25 a.m. was the candle that broke structure on the 5 minutes chart, because we got that significant close below it, below this lows actually, confirming a break in structure. And also we have a breaker here. So, but in this example, I'm going to use a fair value gap. So this is the fair value gap I'm going to use right here. That was created just after we got that break in market structure. We had this fair value gap here being left, but the market did not really come back to retest that fair value gap. We saw this one being retested. So this is the one we're going to use for our entry example. So basically this is a 5 minutes fair value gap. Then our hypothetical entry comes in inside the fair value gap. So I'll use the low of the fair value gap right there. And then above this high right here. So you can use either this high if you're aggressive, or you can use the high of this candle if you're a bit conservative. So I'll use this high right here. So that's about almost 10 pips stop loss. Then we have this low here, which is the initial London low. So you can see not always that the low created during London, these are 3 or 5 a.m. will remain the low of the day, because New York also has a potential of creating that low. So you can see the initial London low becomes our target. So this is a liquidity target. So you can see how significant those lows are. So sometimes you can use them as targets, like in this example. So you can see here, I'll say that this is a very good area to take partials. So you can take partials here once that London low is run right there. This is at 9:50 a.m. So we still have time within the New York session. So you can see the market actually aggressively dropped. This is at creating a low at 10:05 a.m. during New York session. So I'll say you had the potential. So basically, even before that drop, you're already making 1.99, about 2R at that low, which is you're taking partial. So maybe you're taking 50% off at that low, London's low. So basically, when the market continues dropping, you can see you have a potential of making even up to 5R. So this is how powerful this strategy is actually. You can see clearly from this, just from these examples, that this strategy is very powerful. And your entry now comes in at 9:40 a.m., which is during New York session. So this is another example where we are seeing the market creating this setup in the New York session. So basically, that is the setup breakdown, and that's how you can use this strategy actually to formulate and come up with setups from the charts. So thank you so much for watching. I'll see you in the next lesson.